let's talk about investing in REITs listed in Singapore today. But firstly, what are REITs? REITs are real estate investment trusts, which are financial products that allow you to invest in a portfolio of properties without having to buy or manage them yourself. So it is mainly a rental income business, which then share profits by distributing dividends to the shareholders. Now, why invest in REITs? I'll give you 4 key reasons. And number 1 being the most important one, high dividend yields. Many Singapore REITs, short form known as S-REITs, do offer 5 to 8% in terms of annual dividends. Number 2 is because of passive income, because REITs must distribute at least 90% of the taxable income as dividends to the shareholders, so you will continuously receive all these dividends as your passive income. Number 3, it is easier to manage than property investments, even though both are in the real estate industry. So there's no need to look for tenants, and there's no need to manage your property in terms of the facilities and security and whatnot, or even pay high property taxes, because REITs are not subjected to all these taxes. And number 4 reason is the liquidity, because you can easily trade your REITs whether you want to buy or sell them through the Singapore listed exchange. So they do trade the same way like stocks. Unlike for property investments, you may have to look for a real estate agent to help you market the property, and it's a long, tedious process with many fees involved. And if you want to start investing in REITs, Moomoo Singapore do offer zero commission REIT trading, which is a limited time promotion with real-time market data for you to analyze REITs easily. And they are also the sponsor of today, but more on them later. But the main question of today's topic is that if you want to invest in REITs, should you go for REIT ETFs or should you go for individual REITs? So these are 2 main ways where you can invest in REITs. A REIT ETF offers a more hands-off approach where you don't have to select manually what REITs you want to invest in, because a fund manager will do that for you. For individual REITs wise, you have to choose your own REITs carefully, though you have more control, and that may be higher yielding in return. But let's compare them side by side, REIT ETF versus individual REITs. What do they differ in? Starting with REIT ETFs, if you prefer a more hands-off approach, okay, you don't want to keep looking at all these individual chart reports, business reports, news affecting the individual REITs, then it's a very good way to start with a REIT ETF. In fact, when you go with a REIT ETF, you invest in a basket of REITs. So it's not just one REIT, you invest in multiple REITs, and therefore diversifying your risks. Now, there are some popular REIT ETFs that are listed in the Singapore Exchange, and you can trade them on Moomoo SG app. For example, Lion Philipp S-REIT ETF, ticker CLR. This ETF will track the large cap listed Singapore REITs, mainly in the Singapore market. Next, we also have Nikko AM Straits Trading's Asia X Japan REIT ETF, ticker CFA. So this ETF do consist of Singapore REITs and also the regional REITs along the Asia region. Lastly, there is also the Philipp SGX APAC Dividend Leaders REIT ETFs, ticker BYI, which focuses on high dividend REITs. If that is your liking, you prefer high yields, that is BYI. And the most important thing about REIT ETF is that you need to know what are their holdings. And to do that, you can go to Moomoo app, search for the specific ticker that you want, for example, CLR, CFA or BYI, and you can look at what are the specific REITs that this ETF are holding and to what percentage. So you can see the list of the top holdings in terms of what REITs they invest in. Like I mentioned, if you look at CLR, it is mainly Singapore REITs, so there is no regional REITs. So if you're a fan of Singapore REITs, really CLR is the one. But if you want to look at more regional REITs outside of Singapore, for example, those listed in Hong Kong, right, then you can look at CFA or BYI. Now on the Moomoo app, you can also get the asset breakdown and dividend yield. These are all key parts of information that you should know before investing in REITs. What you need to do is to click on the fund button, then click on the breakdown, the dividends, and the profile of the company, and they will all show you the information that is required. So if you're looking to understand the specific differences between the different REIT ETF, you can use Moomoo to make a detailed comparison. You can also check information about the money flow to find if the selected REIT ETF is popular among investors. So having said all of that, what are the pros of using REIT ETF to invest in REITs? Number 1 is of course diversification, because you can be exposed to multiple REITs in one trade, reducing the risk so you don't have to handpick your REITs. Number 2, lower effort, because some people do prefer a more hands-off approach. There's no need to track and manage individual REITs and read all their financial reports, because you just need to focus on your REIT ETF. Number 3, automatic rebalancing, because the ETF manager will adjust the holdings over time according to the profile and how they want to invest for the long term. Because some REITs may have enjoyed a very good run-up during the bullish market, and the REIT manager may want to reallocate these resources to another REIT which has more potential for growth in the future. And the number 4 pro of REIT ETF, like I said, is the liquidity. So it's easily tradable on SGX market. So you can buy and sell on the same day, in fact, if you want. But of course, on the other hand, there are also cons for using REIT ETFs. Number 1 is the additional management fees, because ETFs do have to charge a fee on top of what the REIT manager is charging. For example, if you look at ticker CLR, they do charge a 0.5% management fee on the Moomoo app, which is shown transparently right here. Which, to be honest, this is just standard practice across ETFs, right? They have to charge a management fee to help you manage more. You're outsourcing the investing to help you manage all the investing decisions. So it's like an outsourced service. And number 2 con of REIT ETF is that you have lower dividend yields, because there is only one standard dividend yield that can be derived from the REIT ETF. Whereas if you look at individual REITs, some of them may be higher than the REIT ETF itself. Which brings me to the last con of REIT ETF, right? You cannot choose which REIT you want to own. For example, if you look at ETF, there are some REITs that you like, but there are other REITs that you don't like, and you cannot remove them because you invested in this ETF. You have to accept the fact that the ETF manager is doing their best in your best interest, right? Even so, there are some REITs that you may not really like. Therefore, if you move to the opposite side, if you want to invest in REITs, should you look at individual REITs instead of a REIT ETF? And I felt that for investors who want a higher dividend yield and control, buying individual REITs may be a better option. Let's talk about some pros of buying individual REITs, starting with number 1, higher dividend yield. Now, some individual REITs do yield 5% to 8% annually, and this is higher than the REIT ETFs. Now, to find out how much does the individual REIT yield in terms of dividends, you can go to the Moomoo app, because the app will show you how much is the dividend yield, the frequency, the dividend history, and the dividend calendar, which you can use as a Moomoo user to determine whether you want to invest in this REIT. Number 2 reason to invest in individual REITs is that you have more control, because like I said, ETF, you cannot choose what you like or what you don't like. You just have to accept it. But individual REITs, this time, you can choose what you like. Then for those you don't like, you just don't pick it. Some investors may prefer retail REITs and commercial REITs, and then they do not favor the industrials and the data center and whatever healthcare REITs. So it's really up to your own preference. And the good news is you can also find out what industry is the REIT investing in. All this on the Moomoo app, where you can discover the specific industries. For example, ticker C38U, that is the CICT, Capital Land Integrated Commercial Trust. If you look at the company, you can see that they focus on retail and office spaces. Number 3 reasons for individual REITs is that there is potential for capital gains, especially in the current depressed environment when REITs just went through a high interest rate environment. If the REIT value rises, there is potential for capital gains, and all these are additional on top of your dividend yield. And number 4 is the most important reason, which is there is better cost efficiency, because there is no additional management fees, unlike what the REIT ETF are charging you, the 0.5% like I mentioned earlier for ticker CLR. But hold on to your horses, don't just think everything is a pro, because there are some cons of buying individual REITs as well. Number 1, it requires research, and I meant very deep research. You will need to analyze financials, gearing ratios, and sector trends, read all the business deals, and that's just for one individual REIT. Now imagine if you have a basket of REITs in your portfolio, you have to do the same for every company that you invest in. That is a lot of time and effort. Number 2, less diversification, because now you are zooming all your positions into one single REIT, and if that particular REIT performs really poorly, it will drag down your overall returns in your portfolio. And number 3, higher transaction costs. Now, if you want to invest in a portfolio of REITs, you cannot just only buy one REIT, right? It is more common that people buy a portfolio of REITs. So let's say if you want to build a REIT portfolio, you buy 10 REITs. That is 10 times the transaction cost versus a REIT ETF where the transaction cost is just one time, and then you get like multiple REITs. So you have to do the cost analysis yourself, because the more times you buy, the more trading fees that you will have to incur, and cost is always guaranteed, but profit is not guaranteed. And the next popular question will be, if you're not sure which REIT to pick, what are the best REITs to invest in? On the Moomoo app, you can go to Markets, SG, then click on REITs, and it will help you filter REITs by price, volume, turnover, market cap, and more. So if you want to sort by volume, you can look at the most traded REITs on Moomoo SG. And this will include REITs like Capital Land Integrated Commercial Trust, CICT, which focuses on retail and office spaces, Mapletree Logistics Trust, that focuses on logistics properties, Capital Land Ascendas REITs, that focuses on business parks, industrials, and data centers. And lastly, Fraser's Logistics and Commercial Trust, or FLCT, which is a mix of industrial and commercial assets. So after hearing through my long story, if you cannot remember everything, I just want you to take away from this comparison table that I have prepared. REIT ETFs versus individual REITs. Starting with diversification, REIT ETF will offer a high diversification versus individual REITs, which is low diversification. In fact, there is no diversification unless you buy multiple REITs to form your own portfolio. Number 2 is the dividend yield, because for REIT ETFs, since it is spread across a basket of REITs, it will enjoy slightly lower yield compared to individual REITs, which can yield much higher, up to 8% per annum. Number 3, ease of investments. If you prefer a more passive, hands-off approach, ETF is definitely the way to go. But if you go for individual REITs, it would ultimately require more research and reading into financial numbers, data, and analysis. All these things take up time. Number 4 is additional management fees, because REIT ETFs do charge all these additional fees on top of the usual fees that the REITs are already charging. So if you buy individual REITs, you don't have to incur the additional fees. Number 5, customization. That is not possible for REIT ETF because you will buy what the ETF manager has already ordered. Whereas for individual REITs, you can choose those that you really like and then don't invest in those that you don't like. And finally, if you look at the potential for capital gains, REIT ETF, because of their diversified nature, will be potentially slower compared to individual REITs, which have higher potential for capital gains. So if you want to start investing in REITs, open the Moomoo Singapore Universal account today and get some exclusive rewards from my referral link, like the $20 trading cash coupon and up to 450 Singapore dollars of Tesla fractional shares and 350 Singapore dollars of trading cash coupons when you fulfill the funding, trading, and holding requirements as per terms and conditions. Total rewards value is up to 820 Singapore dollars. Also, if you sign up for Moomoo now, you can get 0 commission for SG REITs for 1 year. So use my link below or scan the QR code right here to get your Moomoo SG Universal account today. Overall, if you were to ask me my thoughts on which one is better, REIT ETF or individual REITs, I would say that choose REIT ETF if you want diversification, right? Simplicity, passive income. You don't want to meddle so much. You really just want to be a passive nature and then focus on your active income. Okay, you want to build business, your side hustle. Okay, choose REIT ETF. But if you really are very interested in investing, you want to look at financial numbers, you are very okay to dive into the business nature and the industry and all this, okay, you have time to do all this effort and calculation, then choose individual REITs, okay, for higher yield, higher control, and you can love the research if you like. But what about a hybrid strategy? Because you can allocate like 50% to REIT ETF, and then the other 50% is like what you really want to focus fire into these individual REITs that you really like. So I guess there is a mix of both that you can enjoy. So if you're not a fan of REITs, then you want to look at other investments. How do you really invest as a beginner? I've already done a beginner guide on how to invest for beginners right here.